Hello. Thanks for joining me. I'm Tara, Director of Enterprise Learning at Money Management International, a full-service nonprofit credit counseling organization. Many people dream about starting their own business, and more, they're making that dream a reality. According to Overload.com, there are over 32 million small businesses in the United States, making up more than 99% of total U.S. businesses. Successful entrepreneurship starts with a great business idea and a well-thought-out plan, including choosing the right type of business structure. There are several key factors you'll want to consider, like ownership rights and day-to-day operations, personal liability risk, tax implications, and future sale of the organization. So let's take a closer look at some common business entities to see which one might be right for you. A sole proprietorship is the easiest and least expensive organization to form. You own the business and have complete control. In fact, if you do freelance work, for example, you're already a sole proprietor. Although, if you operate under a name other than yours, you'll need to file a DBA or doing business as name, typically with your county clerk's office. This is a trade name, not a separate legal entity, so you can't obtain business credit with a sole proprietorship. But as the sole owner, the business is not taxed separately, so income is reported on your personal tax returns, adding low tax rates and easy tax prep to the list of benefits. But keep in mind, because there is no legal separation between you and your business, you assume unlimited personal liability for business debts and obligations. And of course, you carry the full weight of running the business. You may also face challenges when trying to raise business capital as a sole proprietor, and you may have limited retirement and benefit options as well. In a partnership, two or more people own and run a business. With a partnership, you'll have to file business tax forms, but instead of paying taxes on the business, profits and losses pass to personal tax returns for each partner, and they share personal liability for business financial obligations. You'll likely need to obtain required licenses and permits by industry, state, or locality, but a partnership is the easiest and least expensive organization for two or more people to form. There are different types of partnerships, each with advantages and disadvantages, but in general, you'll benefit from shared financial commitment and the ability to pool resources for capital. Each partner will also contribute unique strengths and expertise, so you don't have to shoulder the burden on your own. And if you offer employees the opportunity to become a partner, you'll likely attract highly motivated and qualified talent. But partnerships also mean shared profits, as well as joint and individual liability. Partners are liable for their own actions as well as business commitments made by other partners. With multiple people involved, disagreements are bound to happen, so be sure to communicate openly and negotiate fairly, and aim for equal contributions of time, effort, and resources. If you have a medium or high-risk business that you might want to sell or take public, a corporation could be best. Like partnerships, there are different types of corporations, each with advantages and disadvantages. But a traditional corporation, or a SCorp, is a business independent from its owners. There is no personal liability, so your personal assets are protected. In fact, there are employees and shareholders, and ownership is based on the percentage of stock held. So if a stockholder leaves, there's little disruption to the business. As an independent structure, the cost and requirements to form a corporation are more extensive, and so is the record keeping and reporting. But it's easier to raise capital funds, and by selling company stock or giving shares as employee benefits, the business can be better supported. Corporations are taxed as separate entities with corporate tax rates, paying income tax on profits, and sometimes again when dividends are paid to shareholders. But to help offset double taxation, corporations can also deduct employee benefits and other expenses. It's worth noting, if your business meets the criteria, you might consider filing with the IRS to get an SCorp status. S corporations have a special designation allowing them to avoid double taxation and corporate tax rates, by filing business tax forms but passing profits and some losses to owners' personal income tax returns. Essentially, you get the liability protection of a corporation with added tax benefits. You can learn more about criteria to file as an SCorp at irs.gov. Lastly, a limited liability company, or LLC, is a hybrid structure that combines the limited liability of a corporation with operational flexibility and tax efficiency of a partnership. This might be a good choice if you have a medium to high-risk business, but you want a lower tax rate and personal asset protection. It's not treated as a separate tax entity, so while tax forms are filed, federal income taxes are passed on to the LLC's members or owners and paid through their personal income tax return. Keep in mind, while the federal government doesn't tax income on an LLC, some states do. So be sure to check with the income tax agency in your state. LLC registration requirements and startup costs are smaller than with a corporation. And there are fewer restrictions on profit sharing compared to a partnership because LLC members can distribute profits as they see fit. And with an LLC, it's typically easier to raise capital funds than with a partnership, but not as easy as it is with a corporation. Here are some other things to consider. Unlike a corporation, in many states, when a member leaves, the business is dissolved and remaining members can start a new LLC if they choose. And because members of an LLC are considered self-employed, they must pay the self-employment tax contributions toward Medicare and Social Security. In fact, the entire net income of the LLC is subject to this tax. When it comes to choosing the right business entity, a thorough understanding of the potential benefits and drawbacks of each type puts you in a good position to move forward with a solid plan for your organization and one step closer to making your small business dream a reality. For additional resources and more information on business structures, visit the Internal Revenue Service Business Structures page at irs.gov or visit the U.S. Small Business Administration at sba.gov. And check out our small business credit video for tips to help you establish and manage business credit. Thanks again for joining me today, and best of luck on your journey to entrepreneurship. For additional financial wellness topics or to connect with us here at MMI, give us a call at 866-889-9347 or visit us online today.